analysts. You are all welcome once again. Please, GS, the floor is yours.
Thank you very much, Francis. Good morning, ladies and gentlemen. Today, the Ghana Statistical Service presents the Consumer Price Index and inflation for February 2026. This release matters because, as we know, inflation affects everyone. It affects how much households spend at the market. It affects how businesses price their goods and services, and it influences decisions taken by policymakers, investors, researchers, and development partners. And as we know by now, inflation is not just an economic concept. It's about the cost of food. It's about the cost of transport. I mean, we all rent houses and all that. So it's about the rent. It's about school fees that we pay. It's about our daily lives. Now, our responsibility at the Ghana Statistical Service is very simple. We measure prices and price movements. And we do that to the best of our ability. We do that accurately. We report them objectively, and we make the data accessible to all. Now, in today's release, we'll present the definitions and measurements in relation to the CPI and inflation. We'll look at the headline inflation highlights, and then we'll look at the drivers of the price changes. And then we'll close with some takeaways as well as some practical recommendations that may help. We'll also provide deeper analysis on inflation, including goods versus services, local versus imported items, contributions to inflation, and regional disparities. This ensures that the data are not just numbers, but then they provide very useful insights. So let me jump briefly into the definitions measurement so that to give us a very good basis to jump into the numbers. Now, year-on-year inflation measures how prices have changed compared to the same month 1 year earlier. For example, February 2026 prices compared to February 2025 prices. Another term that I'll be using very often is month-on-month inflation, which measures how prices changed from the previous month. For example, prices in February 2026 compared to prices in January 2026. So what we should really know is that whilst year-on-year prices or inflation shows long-term trends, month-on-month inflation shows short-term momentum. But we need to know that both are very important for inflation insights. Now let's jump straight into the numbers. The Consumer Price Index, or the CPI, for February 2026 stands at 264.4, up from 255.9 in February 2025. This translates into a year-on-year inflation rate of 3.3%. This means that, on average, prices are 3.3% higher in February 2026 than they were in February 2025. Now, this is a 0.5 percentage point down from the 3.8% inflation recorded in January 2026. It is a 19.8 percentage point down from the 23.1% inflation recorded in February 2025, that's a year earlier. And it also marks the 14th consecutive month of decline. In fact, it is the lowest inflation rate since the 2021 CPI price rebasing. Month-on-month inflation for February 2026 is 0.8%, meaning that prices increased by less than 1% between January and February 2026. The steady decline from the 23.1% the previous year to 3.3% today reflects significant easing of price pressures. Now let's look at inflation by component. And here I would like us to look at inflation from the viewpoint of food versus non-food, locally produced items versus imported items, goods versus services, and also look at it from the viewpoint of regional dynamics. Now let's begin with food. If you look at February 2026 inflation by component, as I mentioned, we'll see that food inflation is critical because food affects every household. In fact, it constitutes about 43% of the inflation basket. And in February 2026, food inflation fell to 2.4%, down from 3.9% in January 2026. Now, the data shows that except ready-made food and other food products whose year-on-year inflation increased between January 2026 and February 2026, all other subclasses under food, namely vegetables, tubers, plantains, and cooking bananas, cereals and cereal products, fish and other seafood, and live animals, meat, and other parts of slaughtered land animals, all witness declining inflation. In fact, the vegetables and cereal subclasses experienced year-on-year price declines in February 2026, with negative inflation of 3.2% and 7% respectively. Now, food constitutes about 30.3% of the overall inflation rate of 3.3% in February 2026. So in other words, I'm talking about the contribution of food. And if you look at the inflation for February 2026, we see that food contributed about 30.3% to the overall inflation rate of 3.3% in February. Now, month on month, food prices increased by 0.2% in February 2026, down from 1.1% in January 2026. What does this tell us? So this tells us that food price pressures are easing significantly. And this is good for households because, as I mentioned earlier, food constitutes a very significant proportion of the inflation basket for households. Also for policymakers, this signals improving supply conditions. Now let's look at non-food. Non-food inflation rose slightly to 4% in February 2026, up from 3.8% in January 2026. And in fact, non-food inflation or non-food contributed about 70% to the overall inflation of 3.3% in February 2026. Month on month, non-food prices increased by 1.2% between January 2026 and February 2026. So while food inflation slowed, we've seen that non-food items experience moderate upward movements. And what does this tell us? So this tells us that inflation is becoming more concentrated around non-food items rather than broad-based. Now let's look at inflation from the viewpoint of breakdown between goods and services. Goods inflation slowed to 3.2%, down from 3.7% in January 2026. And as we know, goods account for nearly 3/4 of the CPI basket. So this slowdown has a very strong impact on overall inflation. In fact, goods contributed 70% to the overall inflation of 3.3% in February 2026. Month on month, we saw goods prices increase by 0.94% between January 2026 and February 2026. If we turn to services, we see that services inflation eased to 3.7% in February 2026, down from 4.2% in January 2026. Services contributed 30% to the overall inflation in February 2026. Month on month, cost of services increased by 0.3% between January and February 2026 compared to 0.5% between December 2025 and January 2026. This indicates moderation across both goods and services. Let's also look at inflation from the viewpoint of locally produced versus imported items. Inflation for locally produced items declined slightly to 4.5% in February 2026 from 4.6% in January 2026. Locally produced items contributed about 94% to the overall inflation in February 2026. Now, if you look at imported items, we see that its inflation dropped to 0.6% in February 2026, down from 2% in January 2026. Now, imported items contributed 6% to the overall inflation of 3.3% in February 2026. This suggests that exchange rate stability and easing global price conditions are helping moderate imported inflation. Domestic supply conditions remain central to overall inflation dynamics. Now let's shift to regional dynamics. The data shows clearly, as we have reported in the past, that inflation is not uniform across the country. The latest inflation figures we have show that the Northeast region recorded the highest year-on-year inflation at 8.9% in February 2026, even though it is down from 11.2% in January 2026. Now, if you compare this to the Savannah region, which recorded negative inflation of 5.6% in February 2026, then you see that there's a very deep variation among regions with regards to inflation. So disparities are extremely wide. But in each of these two cases, we see that inflation is moderating. So even though Northeast recorded the highest inflation rates, if you compare it to what obtained in January 2026, it's actually an improvement because it shows reduction in inflation. Even the Savannah region that recorded the lowest inflation, we've also seen that even last year, it also recorded negative inflation. Now, what does these inflation numbers mean for these two regions? So this means that whilst prices increased by 8.9% between February 2025 and February 2026 in the Northeast region, prices declined by 5.6% in the Savannah region over the same period. As I mentioned earlier, usually when you have inflation which is positive, it means that prices are increasing. When inflation is negative, which is what we call deflation, it means that prices are reducing. So whilst in the Northeast, prices increased by 8.9% in February 2026, in the Savannah region, prices declined by 5.6% in the same period. Note that even though Northeast region recorded the highest inflation, its contribution to overall February 2026 inflation of 3.3% is only 3%. So in other words, it's not enough for an item or a region or a division or a subclass to register high inflation for it to be the most contributor to inflation. It has to take the inflation rate as well as the weight for us to be able to know the collective impact or the real impact of that item or region or subclass on inflation. And the Northeast region is a very classic example. So you have Northeast region, which is recording the highest inflation at 8.9%, but then its contribution to inflation is only 3% because it has a very small weight in the basket. Now, each of these two regions that I've talked about, however, witnessed month-on-month price declines between January and February 2026. So if you look at Savannah, we saw price declines of 1.5% month-on-month. And then if you look at Northeast, we've seen price declines of 1.4% month-on-month. So what is happening in there? If you take the Northeast, which has recorded 8.9% year on year, but on month, we see a decline in prices. It means that the short-term momentum of price changes is manageable or has reduced in the Northeast region, even though on year-on-year basis, which is long-term, it is registering the highest inflation. Now, Greater Accra recorded the highest monthly increase at 2.4%, whilst the Western region recorded the lowest at negative 2.7%. This shows short-term price movements very significantly across the regions. Now, this wide inflation gap we are seeing across regions actually highlights differences in local supply chains, transportation costs, market access, and regional demand conditions. So national averages tell only part of the story. The regional data completes the picture. So any intervention that has to be done to address inflation in the country should take into consideration these disparities so that interventions are targeted and not wholesale. Now let's look at the top contributors to inflation. So one may ask, what is contributing the most to the inflation we are recording in February 2026? Or what are the key drivers of inflation? The top 5 regional contributors account for over 93% of inflation. And these regions are: 1, we have Greater Accra, that registered a year-on-year inflation rate of 4.8%, but contributed 41.5% to inflation. Like I mentioned earlier, because Greater Accra has a bigger weight, even though its inflation rate is 4.8%, slightly above the overall inflation rate of 3.3%, but significantly lower than the rate recorded in Northeast, which is 8.9%, but recording a contribution of 41.5% to the 3.3%. So what explains this significant contribution is the weight of Greater Accra, which is very big. You take Ashanti region, which recorded an inflation rate of 3.7%. It contributed 24% to the overall inflation rate of 3.3%. Then take Eastern. It recorded an inflation rate of 6.2%, but contributed 19.2% to the overall inflation rate. And then when you take Volta, its inflation rate was 5.4%. It contributed 7.3% to the overall inflation. And Central region, that recorded inflation of 2.4%, contributed 6.3%. So if you take these 5 regions out of the 16 regions, the 5 regions alone contributed over 93% to the 3.3% inflation in February 2026. In fact, the top 5 high inflation regions, namely Northeast, Eastern, Volta, Greater Accra, and Ashanti, contributed 94% to overall inflation of 3.3% in February 2026. Now, the top 5 contributing items, what I just talked about are the regions. Now, let's look at the top 5 contributing items. Now, these 5 items actually accounted for 55% of overall inflation, and these items are charcoal, which contributed 15.5% overall inflation. Then you have green plantain, contributing 14.8%. You have cinema and cultural services contributing 8.9%. You have public and private secondary school fees, which contributed 8.5%. And then river fish, which contributed 7.8%. So like I said, just these 5 items contributed 55.5% to the overall inflation of 3.3% in February 2026. This means a small number of items and regions drive most of the price movement. So it means that if you want to take action on inflation, you need to look for these items both in terms of high inflation and also in terms of contribution, particularly in terms of contribution, to target the responses to be able to bring inflation down. So when inflation is concentrated, targeted interventions become more effective. Now let's look at the top 5 high inflation items. So what we have just discussed are the top contributors or the drivers, which take into consideration both their inflation rates and then their weights. But now I want us to look at the top 5 high inflation items, just their inflation rates. Among the highest inflation items are key consumption goods and services within food and non-food items. And the top 5 are 1, green plantain. In fact, it recorded the highest inflation rate of 67.9% in February 2026, same as recorded in January 2026. The next highest is ginger, with inflation rate of 59.1% in February 2026. But this is down from 72.3% recorded in January 2026. Followed by shrimps, which recorded an inflation rate of 58.1% in February 2026, down from 48.8% in January 2026. This is followed by charcoal, with inflation rate of 53.1% in February 2026, down from 53.7% in January 2026. And then crab, with inflation rate of 46.9% in February 2026, down from 42.4% in January 2026. So these items recorded the strongest year-on-year increases. And altogether, they contributed about 38% to the overall inflation in February 2026. This shows that price increases are not widespread, but concentrated in specific items. But at the same time, we've also seen several items recording very low or negative inflation. And here, let's look at the bottom 5 low inflation items. These items are garden eggs, which recorded an inflation rate of negative 58.7% in February 2026, same as recorded in January 2026. So this means that for garden eggs, we actually recorded deflation, because negative inflation means deflation. And what it actually means is that the prices of garden eggs actually reduced by 58.7% between February 2025 and February 2026. Then followed by pawpaw, which saw an inflation rate of negative 49.3%, or deflation of 49.3% in February 2026, down from negative 46.9% in January 2026. Then the third is fried fish, with inflation rate of negative 49.2% in February 2026, from negative 50.7% in January. Then we have contumely or cocoyam leaves, with inflation rate of negative 47.3% in February 2026, up from negative 49.1% in January. And then fifth, we have fresh okra, with inflation rate of negative 42.4% in February 2026, down from negative 40.6% in January. So this bottom 5 inflation items actually dragged inflation down by 17.6%, helping offset the overall inflation rates. This balancing effect partly explains the sustained decline in headline inflation. Now let's look at the drivers of the February 2026 inflation, especially from the viewpoint of divisions, inflation by divisions. The main drivers of inflation in February 2026 include 1, housing, water, electricity, gas, and other fuels, which contributed the highest to inflation, about 39% to the overall inflation of 3.3%. The second driver is food and non-alcoholic beverages, which actually contributed about 31% to overall inflation. As I mentioned, we've seen some gains in terms of year-on-year inflation, but because the basket, food is very heavy in the basket, even when you have moderation in inflation rate, it still impacts on the driver or the contribution to overall inflation because of its heavy weight. Now, the third largest contributor is education services, which contributed about 14% to overall inflation. Then we have recreation, sports, and culture, following with a contribution of about 11% to overall inflation. Ladies and gentlemen, three divisions, namely insurance and financial services, that's one. Secondly, health, and then three, information and communication divisions, contributed the least to inflation. In fact, they contributed altogether, these three contributed 3% to inflation, whilst we saw transportation actually dragging inflation down by 24%. So in other words, the contribution negative. So easing imported inflation, moderation in goods inflation, slowing food prices, and selected services such as insurance, financial services, health, ICT, and transportation are the key forces pushing inflation downward. In short, price pressures are narrowing and moderating. Now, what are the key takeaways from the February 2026 CPI and inflation release? Let me summarize them. One, inflation has declined to 3.3% in February 2026 from 3.8% in January 2026 and 23.1% a year earlier. Two, food inflation has eased significantly to 2.4% from 3.9% in January 2026 and 28.1% a year earlier. Three, goods inflation has slowed to 3.2% from 3.7% in January 2026 and 22.6% a year earlier. Four, imported inflation has fallen sharply to 0.6% from 2% in January 2026 and 18.5% a year earlier. Five, regional disparities remain. Northeast region recorded the highest inflation rates of 8.9% in February 2026, while Savannah had the lowest inflation rate at negative 5.6%. And finally, but not the least, inflation today is lower, is narrower, and is more stable compared to a year earlier. What are the key recommendations that we are providing purely from the data? For government, the priority is very clear. Continue to maintain fiscal discipline, stabilize food supply chains, and invest in storage, irrigation, transport, and market access to reduce regional gaps. For businesses, this is the time to improve efficiency, strengthen local supply sourcing, and pass on cost savings to consumers as much as possible. And for households, with inflation easing, there's greater room to plan. Track spending carefully, avoid unnecessary expenses, and build small savings buffers whenever possible. Let me express my sincere appreciation to the market women and men, traders, data providers, businesses, and households who provide price data across the country. I thank the media for responsible dissemination of the data, and I commend the hardworking staff of the Ghana Statistical Service, whose professionalism ensures accuracy, neutrality, and timeliness. This work is collective. At the Ghana Statistical Service, we remain firmly committed to producing timely, accurate, relevant, and credible statistics. Our mandate is clear: provide trusted data to support evidence-based decision-making in national development. We'll continue to strengthen our methods, improve accessibility, and uphold the highest standards of the statistical system. Thank you for your attention. The data are available in the full CPI bulletin, infographics, and technical documentation, which will all be posted on our website immediately after the release. We encourage all stakeholders to engage deeply with the numbers because when we understand the data clearly, we make it collectively. Thank you.
Thank you, Dr. Lassa, for the presentation. Ladies and gentlemen, the February 2026 inflation figures have been released. We want to open the floor. If you have any
Is
questions.
Francis there? Francis, I think you are muted.
No, we can hear him. We can hear Francis.
Hello?
We can actually hear Francis. Francis, we can hear you.
Okay. So thank you for the... Doc, please, can you hear me?
Yeah, I can hear you now.
All right, thank you.
Yeah.
So ladies and gentlemen, we want to open the floor. If you have any question, please raise your hand and I'll ask you to unmute your mic so that you can pose a question. So Eko, please go ahead.
Okay. Good morning, government statistician. Thank you for the presentation.
Good morning.
I want to get a size and scope on the food inflation. At the rate it is, it sounds as though it's also the lowest on a certain form of record. So if you could give me a size and scope of that over the period, I would be grateful. Thank you.
Okay. Let's take some more questions so that we can address all of them together.
And whilst at it, I see that you have put the chart for food, and on the
Yes.
chart it will look like it is the lowest since February. But I know it goes way beyond, because in the times of the COVID, there were times we're having 45% food inflation among others. So maybe if you take us back to your rebase figures from 2021, it sounds as though this is going to be the lowest food inflation in that time period, but I defer to your superior data judgments. Thank you.
Okay, that's fine. We'll get to the food inflation for 2021. But let's take some more questions so that we can come back to the responses.
So somebody with Techno K J7, please unmute and ask your question. And please identify yourself. You've raised your hand, Techno K J7. Any other person for questions, please?
Yeah, hello.
Hello, go ahead. Identify yourself.
Yes, my name is Justice. So
Okay.
I was saying that this is quite a slower reduction, 0.5 percentage point. I'm asking whether we are getting to a place where the long process of inflation is kind of plateauing. Perhaps we'll be seeing a stable or maybe some rise, although it will be marginal in inflation in the coming months.
Thank you, Justice. Do we have any other?
Yeah, Doc. Yeah, so
Go ahead, yeah.
Echo here again.
Yes.
Look, I remember in your early days, we had discussed an interministerial kind of a committee that were working on how to slow food inflation, looking at the transportation systems and what have you. Would you say that that kind of collaboration is bearing any fruits? Or maybe first question, where is that collabo? Where has it been? And do you think that this is bearing any fruits? Or with the risk of the Russian-Ukraine war and what have you, Russia-Ukraine war, sorry, the US-Iran war, could it be that there's a risk of a reversal, given that we don't have structures in place properly, so built to withstand, to at least to make inflation a bit more robust in terms of its slowing trajectory? Thank you.
Okay.
Yes, I've raised my hands again. This is Justice.
Go ahead.
Okay, so another observation I have made, you realize that last week, some foodstuff sellers, for instance, plantain, they load their plantains to the various market centers in Accra, and there are no buyers for them. Now, you realize that annually, we have a season of glut in our domestic food production. But there are points where these same things become very expensive. For instance, today, 5 pieces of tomatoes are being sold at 20 cedis, etc. So what the call was talking about as an interministerial committee to look at bringing down food inflation, what would be the advice you would be giving to policymakers in terms of, our food storage that will ensure that maybe the kind of food harvest we have, a lot of it don't go bad at the time that we'll be needing more when these things are not in season? Thank you.
Please, Government Statistician, please, I think we can go ahead and respond to these questions.
All right. Okay. Just give me a second to get my video on. Okay,
But
so
what I think there are some questions online so they think can get to it.
sorry, who's on the line?
So Francis, there are some questions online so they
Oh,
can
okay.
read them
Yeah,
out.
so the team can give us the questions online, please. Or why don't I take these ones? And then later we can look at the one coming online.
Sure.
So the first question was the question Echo asked with regards to food inflation and then the scope and size. So Echo, first of all, I think I had made a very clear point that food constitutes about 43% of the inflation basket. So if, for example, you have the items in the basket likened to like 100%, 43% of it is food. So what it means is that things, when there are changes in food, it actually impacts on inflation very much. Now, if you go back to time, in December 2022, food inflation year on year was 59.7%. This in December 2022, 59.7%. And then you move forward in time to February 2025. And in February 2025, food inflation was 28.1%. So you see, it has moved down from 59.7% in December 2022 to 28.1% in February 2025. And as we speak today, which is February 2026, it has moved from the 28.1% in February 2025 to 2.4% in February 2026. So you've seen a very significant disinflation in food. And as I mentioned, if you have an item that's constituting about 43% of your inflation basket with such as rapid or significant disinflation, then that surely is one of the main factors that is explaining the disinflation process from inflation actually reducing from a high of 23.1% in February last year to 3.3% in February this year. So that's the response to your question. Then the second question was yes, I think there was a second question Justice asked exactly, which was with regards to whether going forward we'll see inflation plateauing or what will be the trends in inflation. So I must say that I had explained that the Statistical Service is not in the business of projecting inflation. So we are not able to tell you what the projected inflations would be going forward. But if you look in the budget, I'm sure inflation projections you can find in the budget and all that. But I had also explained that there are a couple of factors that actually influence the inflation that we see. I had explained that the inflation that we see is as a result of actions and actions of economic players. It's as a result of market conditions, demand and supply conditions. And so you can look at it from the viewpoint of macroeconomic management, from real sector performance, global development, and then base effect. So all of these work together to tell you what your inflation rates are. If you take the macro side, depending upon the fiscal stance, the monetary policy stance that you're operating, depending upon how you are managing your exchange rates, and all that, they would all go to influence the movement in inflation. If you take the real sector side, depending upon policies in the real sector that are affecting food prices, food production, that would definitely go and affect price movements. If you look at goods that are imported into the country, depending upon exchange rate movement, it will affect imported inflation. Even the locally produced items, if you look at domestic supply chain conditions, you look at cost of doing business and all that, they would all go and help explain inflation. From the foreign side, if you look at global commodity prices, including crude oil prices, etc., would all go and affect inflation. Even foreign inflation, inflation that is happening in where we are importing goods from, that would also go and affect inflation. I also talked about base effect. If the base effect can also explain inflation going forward. If, for example, previously you had registered very high inflation rates, that's when the base effect kicks in. If you compare today's slower increases to last year's sharp spikes, that can also reinforce the disinflation trend. So it's all of these factors that come together to tell what the inflation rate or what the inflation rate would be. But as I said, we are not in the business of projecting the inflation rate. So I would encourage you to look at the projections that have been done by the Ministry of Finance and the Bank of Ghana. And also IMF does projections. We have other independent institutions like the credit rating agencies who do their own projections, etc. So that's how I like to answer this question. There was a question on interministerial collaboration. Yes, Echo, I think you asked this question some time back, and I responded that yes, we have been meeting some policymakers. So far, we've engaged the Ministry of Tourism. We've also engaged the Ministry of Finance. We've engaged Central Bank. So we've engaged a number of key stakeholders. And each time we have an engagement, we are able to present the data, and then we'll make some recommendations. So it was no surprise to us at all when in the 2026 budget, a lot of the recommendations we had made we actually found in the 2026 budget, especially with regards to agriculture, where you have a number of interventions to increase food production, but also with regards to the recommendations we'll be making to reduce inflation, regional inflation gap. And here you see that there's a lot of infrastructure projects, whether they are roads, whether they are bridges, etc., to help address some of the bottlenecks we have, which is causing wide variation in regional inflation. And then I think there was a question on plantain, and the question is GLAT and also price reductions and what we should do to ensure that with such products, which is food, and as we know, food is a very important component of the inflation basket. They are protected so that they don't first affect food security and also secondly affect inflation. That's a good question. So, I mean, I've already answered this question, but I would say that it's, we have to make sure that we continually engage the policymakers and other stakeholders, because at the end of the day, when you go to a market, you have two main players, at least two main players in the market. You have those who are buying, that's those who are purchasing the product, and then you have those who are selling or those who are producing the product, if I may categorize them like that. All of these are economic actors, and you need to protect them very well. And that's why when the government or any government is outlining its economic objectives, you would definitely see price movement or inflation as part of the economic objectives. Initially, the economic objective there is woven around ensuring tolerable price levels or tolerable inflation rates. So in other words, we are looking at inflation rates that is optimal, inflation rate that's consistent with the development objectives of the country. So what this means is that if inflation rate is too low, or is negative for a very long period of time, or is deflation, if you're not careful, that would be inimical, or that would disrupt the objectives of the economy of improving the economy to improve people's living conditions. Because then once you have deflation for sustained deflation, what it will mean is that one part, of the economic actors, which are the producers and the suppliers, will be shortchanged. They may go out of business, they will not make profit, and even that when you have deflation for a very long period of time, you would have consumers actually thinking that there's going to be further deflation. So they would hold on purchases. And if you're not careful, that would disrupt the whole process. So you need some optimal level of inflation that is consistent with the macroeconomic objectives of the country. So yes, we need stability. Yes, we need to be sure that inflation, is coming down and is stable, provides stability, and is sustained. At the same time, we have to make sure that we are hovering around the tolerable level of inflation that's consistent with the development objectives of the country. So I think that is how I would answer this question. Thank you very much.
Thank you, Doc. So there are some two questions online from Francis Sinto of Ghana News Agency. For those who argue that inflation is not reflecting in the lives of Ghanaians, what are some of the major things to show that inflation impacts Ghanaians? And the second question is, what effect will reduction in prices by traders be to consumers and the economy at large? Then there's another from Facebook, Ernestina Mensah, but I think that one you've already answered. What is the outlook of inflation with the happenings in the Middle East? So these are the two questions we have online now. And
Middle East.
yeah, she's asking what is the outlook of inflation with the happenings in the Middle East.
Okay.
Then Akosia MP wants to find out if we can give a summary in P for the P radio.
P. Okay, all right.
The summary, that's the takeaway. So these are what we have now. So please, you can respond to them.
Okay, so that's fine. The first question, inflation is not reflecting. So first of all, I think I would need to take my time to explain this point, which is that the inflation rate of 3.3% for February 2026, as I mentioned earlier, means that on the average, prices in February 2026 are 3.3% higher than they were in February 2025. So it means that the general price level is higher. So if I should put it simply, prices of goods and services if you put all goods and services we consume together, prices increased by 3.3%. But I must say that this 3.3% increase I've mentioned is bringing together price changes of 307 items in the inflation basket. 307 items. So if you put all of these items and their price changes between February last year and February this year, then that is the 3.3% we are talking about. So in there, you would actually find prices of goods that have increased. And you would also find prices of goods that have what? Reduced. In fact, in my release, I had outlined items that have seen price increases. I looked at the top 5 highest inflation items in my release. And then I also looked at the top, the bottom 5 lowest inflation item. And again, if I may make the point, if you take the top 10 high inflation items or top 5 high inflation items, I mentioned that if you take green plantain, for example, you take ginger, you take shrimps, you take charcoal, you take crab, their prices increased. In fact, the highest. And then if you take garden eggs, you take pawpaw, you take fish, fried fish, you take contomere, or you take okra, their prices actually what? Reduced. So if you put all these 307 items together, that's when we talk about general price level increasing by 3.3% in February 2026. So inflation in simple language is the rate at which the general price level rises. So in other words, when we say inflation has reduced from 23.1% to 3.3% over 1 year, it doesn't mean that the general price level has reduced. It means that the rate at which the prices are increasing has reduced. So last year, same period, we are looking at an inflation rate which was in the north of 23%. But this year, February 2026, we are looking at inflation rates which is around 3%. So this means that in both cases, the general price level is rising. But in the first case, which is the last year, we are looking at the general price level rising over 20%. But this year, we are looking at the general price level rising around 3%. So that is the difference. So what I want you to take away from this explanation is that inflation is different from cost of living. In fact, inflation is not the same as cost of living. Inflation is just one aspect of cost of living. And that's a very important distinction to make. Now, you can have inflation coming down, which is very positive. It means that the general price level, the rate at which they are increasing is coming down, which is very, very positive. But your cost of living is not only the price movement. Your cost of living would also be dependent on your income that you earn. So if, for example, you have general price level or the inflation, the rate at which the general price level is rising, decreasing, which is inflation is reducing, but your income is not increasing, or you don't even have that income in the first place, your cost of living will be high. And for you, even though the general price level in terms of inflation is coming down, you may not see an improvement in your cost of living if your income, for example, has reduced. But all other things being equal, in economics we say ceteris paribus, all other things being equal, if you have the same income, your income hasn't changed, but inflation is coming down, what it means is that the impact of inflation on your cost of living would moderate, because if inflation did not come down that fast, your cost of living or your real income would have been eaten away by inflation. So all other things, if you hold your income constant, you hold all other variables constant, and inflation comes down, it bodes well for everybody in the economy. It bodes well for you because at the end of the day, your real income would be protected at the end of the day. So that's how I would like to answer this question. And in fact, I must also say that to answer a question like this would also mean that you have to do it from the viewpoint of who is asking the question. If you take two different people, they're earning the same income, and one is living in Greater Accra, another person is living in Northeast. And then as we saw, Greater Accra, inflation was way lower, like about half of that we saw in Northeast, right? So it means that whilst inflation in Greater Accra is low, the inflation in Northeast is what? It's high relatively. These two people have the same income. Let's assume that they purchase the same items in the basket. It means that one will be worse off. The one in Northeast will be worse off compared to the one in Greater Accra region. So for these two people, one may complain that I'm not seeing the impact of the reduction in inflation in my cost of living or in my pocket. But for the other one in Greater Accra in a certain location, that may not be the case. So it is all relative. So it also depends on geography. It depends on where you are, because the data shows that geography matters. The data shows that where you live matters. And those who live in Northeast see higher inflation rate, though inflation is coming down. But those who live in Savannah see very low inflation, in fact, negative inflation rate for Savannah, meaning that the price changes are negative, meaning there is deflation, meaning price levels are reducing. That's what it means in Savannah. In fact, you could also answer this question with regards to these two people. What products are they consuming? If, for example, the two people involved are consuming products whose prices have reduced in the period. Remember, I said that the 3.3% inflation overall consists or comprises of items whose prices have reduced and also items whose prices have what increased. And when you strike the average, that's when you have the inflation rate of 3.3%. So if you take two individuals who are consuming different products in a basket, but for one individual, the products or the services and goods that that individual is consuming are the items whose prices have increased in February, or items which have seen higher inflation in February. And then you take the other individual. The other individual largely consumes products whose prices have what reduced, negative inflation. For these two people, when you say that I'm not when the person who has seen price increases say that, oh well, this inflation that is coming down, I'm not seeing it. That other person who is consuming products whose prices have come down will say, what are you talking about? For me, the things I've been consuming, the prices have come down. So you can have a whole day's argument between these two people. None of them, they're all not wrong because they are consuming two set of products. The first set, their prices have increased for this individual, and then the second set, their prices have reduced for that individual. And that's why they see inflation like that. But the Ghana Statistical Service is clothed with the responsibility of collecting all these prices of 307 items across the whole country. In fact, we collect prices from 57 markets. That has over 8,000 outlets. All places in the country, from filling stations, from the markets, from restaurants, from everywhere. So every month we go around and we collect all the prices. So we are the one, that's the Ghana Statistical Service, that is clothed with that responsibility, and we have the ability to go across all the country to get this data. So we have the benefit of putting all the data together to be able to report the average inflation. So usually when people say, well, 3.3% inflation or 3.8% for last month inflation, I'm not seeing it or I'm not feeling it, I don't get surprised. It's just a matter of we trying to ensure that we explain it to people so that they understand what inflation really means. I hope this explanation provides some clarity. Thank you.
Thank you.
Yes, there's a question on Middle East. That's the outlook of inflation, especially if you look at it from the viewpoint of what is happening in the Middle East. I would say that so usually when you have such happenings, you would have impact on crude oil prices, for example. If you have such happenings, immediately there is some impact on crude oil prices. You recall that quite recently crude oil prices came down, and it actually boded well for the price of petroleum at the pump. And then we know what the impact is. Once the price of petrol or diesel or gas reduces at the pump, immediately affects transportation prices, and all that. I mean, we know the impact of this movement on prices. So given that we have this Middle East issue or war, we've seen some gradual movement in prices. So in other words, crude oil prices, which used to be between 60 and 70, we've seen it push up to like 80. Now, if the trend continues the way it is going, or I'd like to answer this question with all other things being equal. All other things being equal, that is likely to affect the ex-pump price of petroleum. And once the ex-pump price increases, that's likely to affect transportation prices. And then that directly will feed into inflation. But I must say that this is a very simplistic explanation. At the end of the day, in real life, you can't hold all other factors constant. As the international price of crude oil increases, or even if it reduces, we have other variables like exchange rates that is also moving. So if, for example, you continue to see the exchange rate appreciation or appreciate, then it's a matter of which factor is outweighing the other. But that's not all. We are also seeing interest rates come down. So if, for example, the interest rates continue to reduce, it also has a bearing on inflation. So the question is, what is the net effect? And then you also see on the fiscal side, you're also seeing the Ministry of Finance actually implementing tight fiscal policies and ensuring that they are rationalizing expenditures, etc. Ensuring that the debt is managed in a manner that is reduced, or borrowing is reduced, and all of these have impact on the fiscal. So I think it's a question of the balancing act. So the increase in the crude oil price, or the perceived increase in the crude oil price as a result of the Middle East intervention, the exchange rate movement, interest rate movement, you have to put all of these together and then look at the net effect. And once you're able to put all together, then it is a net effect that will determine as whether they would have a positive impact on inflation or otherwise. So that's how I would like to answer that. Is there any other question, Francis?
Yes, the summary in tree.
Oh, summary in tree.
Yes.
Okay. Now let's see how we can do the summary in tree. And see, anɔpa yi yɛhyiaeɛ a na yɛrekyia Ghanafoɔ nyinaa. Na Ghana Statistical Service anɔpa yi release inflation a ɔno kyerɛ dɛ mensima nzama bɔ kɔ soro anaa dɛ nzama bɔ ba fam. Every month bi Ghana Statistical Service release them data. Now for the month of February 2026, yɛhu dɛ inflation aba fam to 3.3%. February 2026. Last month, January, na inflation na 3.8%. Just January 2026. Ntaisha inflation no aba from 3.8% in January 2026 to 3.3% in February 2026. Now obebeka and obebi said then inflation 3.3%. As it's trading. Now inflation 3.3% in the trade. Yefa nzama yɛtotɔ wɔ Ghana ha no boa. Na yɛde prices ne yɛde compare the same nzama yɛtotɔ last year, February 2025. Nzama no bo akɔ soro by 3.3%. February 2026. Yɛde compare last year, February 2025. Then at 3.3% in the trade. And even though yes, inflation aba fam to 3.3% in February 2026, on in trade nzama bu nyinaa aba fam. But more trend there means nzama bu kɔ soro no on na aba fam by 3.3% in February 2026. Now, in fact, they compare last year, same period, February 2025. Na inflation, 23.1%. And there, them 3.3% here, Ghana record in February 2026. Wama inflation above by about 19.8 percentage points. Yɛhwɛ so a yɛhu dɛ dɛm inflation rate yi a waba fam yi ɔno yɛ 14th time a inflation aba fam consecutively. But yɛwɔ another inflation indicator bi so a ɛyɛ a yɛhwɛ ɔno no yɛhwɛ yɛfrɛ no month-on-month inflation. Nti ɔno yɛhwɛ between January this year na February this year, just between that 1 month means nzɛma bɔkɔɔ soro. Na yɛhwɛ no between January and February 2026 nzɛma bɔkɔɔ soro by 0.8%. Na obebisa dɛ them inflation 3.3% yɛ maka ho asɛm yi yɛpaapaa mu a abɛdi nti na inflation baa fam to 3.3%. Yɛnhwɛ no from the viewpoint of food inflation, that is ndibana a yɛdi ne bo means ma ɔkɔ soro na non-food inflation ɔno so nneɛma a yɛtotɔ a ɔnyɛ ediban ɔno so ne bo means ma ɔkɔ soro. Nti yɛba nzɛma a yɛdi a that's food inflation. Yɛhu dɛ food inflation waba fam to 2.4% in February 2026. Now, last month, January, no yet 3.9%. Into food inflation, waba fam. Now, you have non-food inflation, which is nzema yatuto a onye diban. Ono so, yehu de ni inflation, or cost soro kakra to 4% in February 2026. Wakai de January, no yet 3.8%. Na February, wako soro to 4.4%. Na inflation story no so yɛpaapaa mu a yɛhu dɛ sɛ yɛpaapaa mu according to ma ɔyɛ goods na ma ɔyɛ services. Yɛhu dɛ ma ɔyɛ goods in inflation no ɔno so waba fam to 3.2% in February. Na ɔyɛ 3.7% January 2026. Na yɛhwɛ services so a ɔno so ne inflation no waba fam to 3.7% in February 2026. Wakai de January na services inflation no 4.2%. Na yɛhwɛ so a sɛ yɛpaapa inflation mu no yɛhwɛ nzɛma a ayɛ Ghana yɛproduce wɔ Ghana ha de ɔno so ne bo yɛhwɛ them prices no so a ɔno so them nzɛma no waba fam ne inflation aba fam to 4.5% in February 2026. Wakai de last month January no 4.6%. Na yɛhwɛ imported items ɔno yɛ nzɛma a yɛkra fi aburokyire de ba Ghana ha ɔno so ne inflation aba fam to 0.6% in February 2026. In fact, last month January no yet 2%. Ntono so ne inflation aba fam. But inflation story a yɛrekan na data na yɛagye a ɔfa nzɛma bo means ma nzɛma bo kɔ soro na ɔba fam no yɛhu dɛ ɔnyɛ the same obi bia o. Sɛ yɛkɔ North East region a ɔhɔ na yɛrekɔd the highest inflation. In fact, na inflation no February 8.9%. The Northeast region in February 2028 cost 8.9%. Yet compare last year February 2025. At the same time, yako Savannah regional. Yehu there region recorded negative inflation of 5.6%. Onna abofom kasa yesi. Anytime inflation negative, yes, or friend vision. In fact, Savannah recorded deflation of 5.6%. On Asicheden, Yako Savannah regional, Nzama Boko foam by 5.6%. Yet compare last year, February 2025. Now, Ubibe Bisade, Abentina Yena Yawa Ghana, Efa region beer, one inflation high, like Northeast, inflation 8.9%. Now, Echo, another region, Savannah, or record the lowest inflation, negative 5%. I've been telling them differences. And them differences, no, or yeah, as a result of nzama bit today, transportation costs, ebia, yeah for car, either nipa yeah for car, another yeah the nzama in the band for car, near transport from one place to another. On them differences in transportation costs, no, in differences, regional differences. Another local supply conditions. Ono trade ebia, bensima, them region no, yetim supply, nzama, yadiye, nzama, what them region no. Say local raw materials in Niho, then obayers in there, prices be from what them region no. Market access, sometimes even to have access to the market, or isn't because of other conditions. In Tiafia, them reasons seen or explain, Mensima, Nzambu, or Kosro, another Bafum, were different regions in the country. In Tiafia, when or you're not say you data, them not say you release the price data, you engineer ho, yema some recommendations, so that recommendations to know, inform businesses and our households and our government. Nti yɛba business side a yɛreka dɛ mensima sisi inflation waba fam for 14 straight months. Inflation waba fam only good for investment, or very good for businesses to ensure that they're investing in efficiency. Now, one increase, one strengthen local supply chains as well. Now, we'll make a profit as well. We'll make sure now one translates savings in the consumers, so that we'll reduce the prices in the kakrama mkrofo, so that water in zamana obey America krama mkrofa water to zaman. Now, households also, even the inflation perform them now. Household one budget, or a stable kakra. Inti yes, a household one share nzama nebo perform nzama nebo kosro. Aya one share inflation data, no one farm make decisions. Now, one team so since inflation or performing, one team so nye savings kakra, so that we my plan one finances. Now, bam so my advice today. Why your BBA was your friend fiscal discipline and a fiscal consolidation. One could demand one making sure that revenue no only increase and expenditures and also one rationalize and now one making sure that spending no or best spend at the right places, spending na other growth beba. Now spending na on for consumption bebre imba. Now spending so on my yemburu bebre. Inti yen regional gaps here yen hui. Yes, your advice abana making sure that will support food production so that it will continue to stabilize food prices. Irrigation investment in you, share food storage facilities near you, transportation issues near resolve. Now market access issue near resolve. Not on reduce regional disparities. Nti adofo na nuanom the Ghana Statistical Service release inflation data na nensem na yɛda to w'anim. Thank you very much.
Thank you, Dr. Lassa, for introducing more of my team. Ladies and gentlemen, we thank you for your presence, being with us for the release of the CPI.
Francis, we are good?
Yes, Doc, we are good. Please, can you hear me? Hello? Can everyone hear me, please?
Yeah, we can hear you.
Yeah,
we can.
Ready to earn more, then listen up.
All right, so this brings us to the end of today's release. We hope to see you again in our next release. Have a wonderful day. Thank you all.
Thank you very much.